$MOVE token tests new lows as ETF bets and buyback plan offers slim relief. MOVE token plummets 80% amidst buyback announcement and emerging ETF possibilities in a stunning development that has sent shockwaves through the digital asset landscape. The MOVE token has witnessed a precipitous 80% decline in its market value. This dramatic downturn has occurred in tandem with the revelation of plans for a token buyback initiative and the nascent stages of discussions surrounding the potential creation of exchange-traded funds (ETFs) linked to the cryptocurrency. The juxtaposition of a massive price collapse alongside news typically perceived as bullish has created a maelstrom of uncertainty among investors and analysts alike, prompting intense scrutiny of the factors underpinning this paradoxical situation. The sheer scale of the 80% price erosion experienced by the MOVE token cannot be overstated. Such a drastic devaluation often signals a profound shift in market sentiment, potentially stemming from the dissemination of unfavorable information, a loss of faith in the project's fundamentals, or broader negative trends affecting the cryptocurrency market. While the concurrent emergence of buyback and ETF plans might suggest an attempt to bolster the token's value, the market's immediate reaction indicates that these prospective measures are either insufficient to quell prevailing bearish sentiment or are being overshadowed by more pressing concerns. Speculation is rife regarding the potential catalysts for this sell-off. Could it be related to recent regulatory developments impacting the project or the wider cryptocurrency sphere? Have there been any significant announcements or lack thereof from the MOVE team that might have triggered investor unease? Or is this simply a case of market volatility exacerbated by large holders liquidating their positions? A thorough investigation into recent news and on-chain data would be necessary to ascertain the precise triggers for this dramatic price action. A token buyback program at its core represents an entity's strategic decision to repurchase its own tokens from the open market. This mechanism can serve multiple purposes, including reducing the overall supply of the token, which, under the principles of supply and demand, can exert upward pressure on its price. Furthermore, a buyback can be interpreted as a signal of confidence from the issuing entity, suggesting that they believe the token is currently trading below its intrinsic value. The announcement of a buyback for the MOVE token suggests that the project's leadership recognizes the severity of the recent price decline and is attempting to provide a degree of support. However, the efficacy of this strategy hinges on several critical factors. The total amount allocated for the buyback, the time frame over which it will be executed, and the prevailing market conditions will all play a significant role in determining its impact. If the announced buyback is perceived as too modest in scale or too protracted in duration to meaningfully address the substantial price drop, it may fail to reassure investors or reverse the downward trend. Moreover, the source of the funds for the buyback will also be a point of scrutiny. Investors will want to know if these funds are readily available and whether the buyback will compromise the project's future development or operational capabilities. The prospect of launching exchange-traded funds (ETFs) that track the performance of the MOVE token represents a potentially significant step towards mainstream adoption. Cryptocurrency ETFs offer a regulated and familiar investment vehicle for both institutional and retail investors who may be hesitant to engage directly with the complexities of cryptocurrency exchanges and private wallet management. The introduction of a MOVE ETF could broaden the investor base for the token, potentially unlocking substantial new capital inflows and increasing its overall liquidity. However, the journey from initial discussions to the actual launch of a cryptocurrency ETF is often fraught with regulatory hurdles and requires the approval of financial authorities. The fact that plans are merely emerging suggests that there is still considerable uncertainty surrounding their feasibility and timeline. Investors may be adopting a wait-and-see approach, refraining from significant price adjustments based solely on the potential for an ETF in the distant future. Furthermore, the specific structure and underlying assets of any proposed MOVE ETF would be critical factors influencing its appeal and potential impact on the token's price. The simultaneous occurrence of an 80% price plunge alongside developments typically associated with positive market sentiment presents a perplexing scenario. Several hypotheses could explain this apparent contradiction. One possibility is that the negative factors driving the sell-off are simply more potent than the potential positive effects of the buyback in ETF plans, at least in the short term. Perhaps there was an unexpected negative announcement or a significant security breach related to the MOVE project that has eroded investor confidence. Another explanation could be related to market timing and perception. If the buyback and ETF discussions are seen as a reactive response to the price collapse rather than proactive strategies, investors might view them with skepticism. Moreover, the lack of concrete details or a clear timeline for these initiatives could be contributing to the market's muted response. It's also conceivable that broader market trends or negative sentiment towards the cryptocurrency sector as a whole are overshadowing any positive news specific to the MOVE token. For instance, concerns about increased regulation or macroeconomic factors could be weighing heavily on investor sentiment across the board. The market's reaction to the MOVE token situation is quite unusual, noted veteran cryptocurrency trader Alexia Reed. Typically, buyback announcements and ETF prospects are met with bullish enthusiasm. The fact that we're seeing an 80% drop suggests that there are deeper issues at play that investors are more concerned about. Financial analyst Ben Carter echoed this sentiment, stating, while the buyback could provide some price support and an ETF could attract new investment in the long run, the immediate market reaction indicates that investors are likely focused on the reasons behind the massive sell-off. Until those underlying concerns are addressed, the positive news may not have the desired impact. The dramatic price contraction will undoubtedly have a profound effect on the risk assessment and investment strategies of those holding or considering the MOVE token. Existing investors may be grappling with significant losses and facing difficult decisions about whether to hold, sell, or average down their positions. The high volatility underscores the inherent risks associated with investing in cryptocurrencies. The success of the announced buyback program in stabilizing the price and the progress towards securing regulatory approval for a MOVE ETF will be critical indicators for the token's future prospects. Positive developments on these fronts could potentially pave the way for a recovery in investor confidence and a rebound in price. Conversely, if the buyback fails to halt the decline or if the ETF plans face significant delays or setbacks, the MOVE token could experience further downward pressure. The cryptocurrency market is known for its rapid and often unpredictable cycles, and the case of the MOVE token serves as a stark reminder of the importance of thorough research, risk management, and staying informed about market developments. Investors will be keenly watching for further news and announcements from the MOVE team to gain a clearer understanding of the project's long-term viability and potential for recovery. The interplay between the ongoing buyback efforts, the potential for an ETF, and the underlying factors that triggered the initial price collapse will ultimately determine the future trajectory of the MOVE token in the dynamic and often turbulent world of digital assets.